Welcome to the deep dive. We sift through the news, the reports, the analysis. Basically, we do the homework so you get the clear picture fast. Today, we're jumping into rare earths. You know, those minerals that are, well, absolutely critical. They're in everything from like defense tech to your phone and EVs, of course, big time. And if we don't have a secure supply, that's a huge vulnerability for tech, for national security, you name it. So our mission today, to give you the inside track on USA, rare earth USRR, they're a really interesting company trying to build up a domestic supply chain for rare earth magnets. We've been looking at their latest Q2 2025 earnings, what the analysts are predicting, and just the whole tricky market they're operating in. It's a company that's strategically vital, no doubt, but financially, they're walking a tightrope. So what's really going on? Let's get into it.
It really is a fascinating situation, isn't it? You've got this company right at the center of, strategic national interest. But at the same time, they're facing these immediate, pretty significant financial headwinds. So yeah, this deep dive will connect those dots, the numbers they just reported, what analysts think might happen next, and these big strategic moves they're trying to pull off. It's all about balancing those present challenges against, well, a very ambitious future vision.
Definitely. And speaking of challenges, those Q2 2025 numbers, they really do grab your attention. Their 10Q filing that came out August 11th, it shows a net loss of, get this, $142.7 million for just 3 months ending June 30th.
Wow.
Yeah. And compare that to the same time last year, it was a $2.8 million loss.
So that's a huge leap.
It's massive. Not just a leap, it's like an explosion in reported losses.
It really is. But okay, we need to unpack that number a bit. When you look closer, a very large chunk of that, about $130.4 million, it's actually a non-cash loss. It's tied to financial instruments.
Oh.
So think things like maybe revaluing convertible debt or stock options, warrants, that kind of thing.
Ah, okay. So it's more of an accounting thing than actual cash flying out the door for operations.
Exactly. It hits a bottom line on paper, makes the net loss look enormous. But it's different from the cash they're spending day to day to run the business and build things out. Still significant for reporting, but important to distinguish.
Gotcha. That makes sense. But even setting that aside, the report also showed their operating expenses shot up, right? Especially the SG&A selling, general, and administrative costs.
Yes, that's right. They jumped from $3.9 million in the first half of 2024 up to $13.3 million for the first half of 2025.
That's nearly a threefold increase.
It is, and that surge, that's a pretty clear sign they're heavily in that ramp-up phase. Investing in people, systems, getting ready for commercial production. It's that upfront cost of building something big.
Right, makes sense.
But those higher costs, combined with the overall reported loss, that's what triggered that serious going concern warning from Guru Focus.
And maybe we should clarify a going concern warning. That's basically auditors or analysts saying, hey, we have some doubts this company can keep the lights on for the next year without getting more money. It's a big deal.
It is a big deal.
Yeah.
And you can see why they'd raise it when you look at the cash burn rate. USR burned through $7.9 million in cash just in Q2 2025.
Okay, so the cash burn raises flags about, short-term survival.
It definitely poses the question. But, and this is crucial, you have to look at the other side. They actually had a pretty strong cash position at the end of the quarter, $121.8 million.
Yeah.
And it even ticked up slightly to $128.1 million by early August.
Oh, interesting.
And here's the key thing. They have almost no significant debt.
Right.
They funded almost everything through equity, selling shares, basically. So while they are burning cash, they don't have these big debt payments hanging over them like many startups do. That reduces a major risk factor.
Okay, that's a really important distinction. No crushing debt, but the cash clock is ticking. So, given all that, how are analysts seeing their path forward? Is profitability even on the horizon?
Well, Simply Walson took a look back in March 2025. Their analysis suggested USR might see its final loss in 2026 and then potentially turn a profit of about $16 million in 2027.
2027. So roughly 2 years from that report date to maybe break even.
That was the projection, yeah. But it's definitely ambitious.
How ambitious are we talking?
To hit that 2027 profit target, the analysts were forecasting an average growth rate of 61% year over year.
61%?
Yeah. Now, look, high growth isn't totally out of the blue for mining companies when they're in that heavy investment phase, building new facilities.
Yeah.
61% year on year, well, it's extremely optimistic. You really have to believe everything goes perfectly according to plan.
Extremely optimistic, definitely. And what makes it even more maybe head-scratching is that despite these analyst hopes and a market cap hovering around $1.83 billion back in August, USAR hasn't actually made any revenue yet. Zero.
Right, they're pre-revenue.
Pre-revenue. And they have a negative tangible book value, meaning their assets are worth less than their liabilities on paper, and a negative free cash flow yield.
Which just confirms they're burning cash, not making it.
Exactly, which is why a site like Guru Focus basically throws up its hands and says, no data cannot be evaluated. They can't even put a traditional value on it yet.
It really is that classic high-potential startup story, isn't it? But just scaled up massively for a critical industry. Like, imagine a biotech firm with amazing science for a new drug. They've raised tons of money, huge potential market, but they haven't finished trials, haven't sold a single pill.
Yeah, that's a good analogy.
The potential is huge. Investors are excited about the future, but the current financial reality is all outgoing cash.
Yeah.
It's inherently speculative at this stage. People are buying the dream, essentially.
Buying the dream. Okay, so that speculative element is key. But that huge market cap, $1.8 billion with no revenue, is that just hype? Or are investors seeing something concrete? Maybe it connects to that recent stock surge. It jumped over 23% recently. Was that just the earnings or something else?
I think the earnings report was part of it. Maybe relief it wasn't worse, or confirmation of the cash position. But more significantly, it seems tied to these new strategic agreements they announced.
Ah, the partnerships.
Exactly. It's less about hype and more about seeing tangible steps towards future business. That gives investors something concrete to hold on to. Like on August 12th, they announced a Memorandum of Understanding, an MOU, with Enduro Pipeline Services.
Enduro. They make those smart pigs for inspecting pipelines, right?
That's them.
Yep.
Sophisticated tools. And USR's neomagnets are going to be used in those pigs. It's a perfect example of what they're trying to do. Build an American-made supply chain for these critical components in industrial tech. Good for jobs, good for resilience. It ticks all the boxes.
And it's not just Enduro, is it? I saw they have a bunch of these MOUs lined up.
Yeah, it's part of this broader strategy, as they call it. They've got deals with e-propelled for motors, Moog for maybe AI and data centers, PolarStar for aerospace and defense, even a company called StudBuddy in residential construction.
That's a wide range.
It is, and that diversification is smart. It shows their magnets have potential uses across lots of different high-growth areas. It's market validation.
Okay, so they're lining up potential customers.
And quite a few, apparently. The CEO, Joshua Ballard, he mentioned having over a dozen initial agreements signed and talks happening with more than 70 other companies.
70? Wow.
Yeah. He even suggested they might sell out their entire first production line that's 1,200 tons before it's even fully running.
That's ambitious, but if true, very significant. It signals real demand.
It does. It's a key milestone, showing market pull even before the factory is turning out magnets commercially.
And speaking of the factory, that Oklahoma plant, that's supposed to start operations in Q1 2026, right?
That's the timeline. And their innovations lab there is already working, making prototypes, getting magnets qualified for these potential customers. So they're not just signing papers, they're actively developing the product.
Good. And underlying all this, they have their own resource base too, don't they? That Round Top deposit in Texas?
Absolutely critical. And Round Top isn't just any deposit. It's rich in heavy rare earths, dysprosium, terbium. Those are the really crucial ones for high-performance magnets and harder to get outside China.
Right.
Plus, it has other goodies like gallium, beryllium, lithium. Having that domestic source, controlled by them, that's a massive long-term strategic plus. It offers that integrated mine-to-magnet potential.
Okay, so that covers USR's specific picture pretty well.
Yeah.
Let's zoom out now to the wider rare earth market, because USR doesn't exist in a vacuum, right? And things sound kind of rough out there.
Yeah, rough is putting it mildly for 2024. One expert described the whole industry as swimming in red ink, and the price drops back that up. Throughout 2024, key magnet materials took a beating. Dysprosium down 33%, terbium down 22%, and NdPr, that neodymium-praseodymium mix, down 9%.
Those are steep declines.
Very steep.
Yeah.
It meant almost everyone was losing money. Only a few big players managed to stay profitable in refining, and even their profits were way down. It was just a really tough year, mostly due to too much supply and demand not meeting expectations.
So is 2025 looking any better on the demand side? Any light at the end of the tunnel for prices?
Well, global demand for magnets is expected to keep growing in 2025, so that's positive.
Okay.
But the growth forecast got trimmed. Initially, people were thinking maybe 9% growth by volume. Now it's looking more like 5%.
Why the downgrade?
Two main things, really. One is just ongoing uncertainty about the Chinese economy. There's such a huge driver of demand. The other is the comeback of hybrid vehicles.
Ah, hybrids use fewer magnets than full EVs.
Significantly fewer. So more hybrids, less overall magnet demand than if everyone was buying full EVs. It impacts the projections.
Got it. So the feeling is kind of pessimistic for early 2025, but maybe more hopeful later on. Is that the gist?
That seems to be the general consensus, yeah. Some experts are pretty downbeat about the first part of 2025, especially after Chinese New Year, which can be slow. But others think prices might have bottomed out or are close to it. The optimism for a real price recovery tends to focus more on mid-2025, or maybe even into the first half of 2026.
And the thinking there is just inventories eventually get used up.
Pretty much. A lot of inventory built up in 2023 and early 2024 when demand was weaker than hoped. The idea is, as that stockpile gets worked through, supply and demand should come back into better balance, and prices should firm up. It's a waiting game.
Okay, a waiting game for market forces. But what about the wild cards? The geopolitical stuff, policy changes, those could shake things up fast, couldn't they?
Oh, absolutely. Huge potential wild cards there. One really big one right now is Myanmar.
What's happening there?
Well, reports suggest the Kachin Independence Army is taking control of a major rare earth mining area near the Chinese border. And China has apparently closed that border crossing. That means key chemicals needed for mining, like ammonium sulfate, can't get in, and crucially, the rare earths can't get out.
And Myanmar is a big supplier to China.
Huge, especially for heavy rare earths. China imported something like 40,000 tons of material from there in just the first 9 months of 2024.
Wow, so if that supply gets cut off for a while...
It could have a big impact on heavy rare earth prices, as one analyst put it. Definitely something to watch.
But is everyone convinced it will be a huge disruption?
Not necessarily. Some argue that region is always unstable, and if this was truly game-changing, we'd have seen a bigger price reaction already. So the jury's still out on the immediate impact.
Okay. And what about China itself? Beyond Myanmar, what moves could Beijing make?
Well, Chinese regulators could always decide to tighten their own production quotas, to try to boost prices and profitability for their domestic producers. They don't want their rare earth sector just subsidizing their EV makers indefinitely.
Makes sense.
And then there's the whole U.S.-China trade tension aspect. Talk of potential U.S. tariffs on rare earths keeps bubbling up.
Yeah, how would that play out?
It could get messy. If tariffs are too broad, they might cause collateral damage, hitting materials the U.S. doesn't even produce domestically yet, like pure neodymium oxide.
Right.
And, of course, any U.S. action raises the question of Chinese retaliation, though some think China's running out of critical materials they can restrict without hurting themselves. It's complex.
Very complex. Okay, so bringing it all back. What's the main takeaway for you, the listener, trying to make sense of all this? For a company like USAR, you've got this vital strategic mission, huge future potential, but it's bumping up against these really serious current financial hurdles and a super volatile market.
Exactly. It's that balancing act. And it highlights the speculative nature. As NAI 500 pointed out, USR, being pre-revenue, is just a much riskier bet right now compared to someone like MP Materials.
Right. MP Materials already mining, processing, getting big government deals.
Yeah, MP got that huge Defense Department deal, potentially making the DoD its largest shareholder to build out magnet production. USR is aiming for that magnet stage too, but they're earlier in the process, still building the factory, still pre-revenue. They're sort of the next wave trying to come online.
Which brings us back to why it matters, right? Even with the financial risks, the speculation, developing this domestic supply chain, having companies like USR succeed, it's seen as fundamentally important.
Absolutely. For national security, for tech independence. It's not just about one company's balance sheet. It's about controlling our own access to these critical resources for the future. It's a bet on resilience.
It really is. Securing that future for everything from defense to clean energy, making sure we're not totally dependent on supply chains that could be disrupted or, controlled elsewhere.
Precisely.
Okay, so we've unpacked quite a bit. USR's big Q2 loss, but also their strong cash position and lack of debt. We've looked at the analysts' very hopeful growth projections and USR's own strategic moves, signing MOUs, getting that Oklahoma plant ready.
Right. And we've placed all that within the context of this wider rare earth market. The price struggles, the demand outlook, those geopolitical wildcards like Myanmar and China policy.
So here's something to think about as we wrap up. In a world that's only getting more reliant on advanced tech, on clean energy, How much risk are countries really willing to take on or maybe even actively support to build their own secure supply chains for materials like rare earths, even if it means backing companies that are still, years away from turning a profit? What does that risk appetite mean for innovation, for global economic power, and really for the future of controlling these essential resources?